Hi, it's Brian Decker with your Market Minute. I want to cover what's happening with the bond market and the inverted yield curve. With yields rising and staying high and the Fed talking down or saying that there's going to be higher longer, the stock market has rolled over and is already down 7-8%. Dow Jones has lost its year-to-date gains and is now negative for the year. Small caps are negative for the year. What's going on? The expectation that next year we will have a recession that expectation is going higher and spreading with other people. Why? Because when the bond market inverts, meaning that the short-term rates are higher than the long-term rates, that has predicted all of the previous recessions. But here's the key. That's within 6 to 24 months, because in 6 to 24 months, when the yield curve goes from being inverted, where the short-term rates are higher than the long-term rates, and the Fed, and this is the key, that when the Fed starts lowering rates, that's when a recession starts. The expectation is with the economic slowdown expected to start next year, that's when the Fed will have room to start lowering rates. And so that's what's going on with the market coming down 6-7% and things starting to reverse themselves in the bond market. So right now, recently, the short-term rates are getting pushed down and the longer-term rates, so the 3, 6, 9-month rates are now lower than the 1 to 5-year rates. So that's a reversion of the inverted yield curve back to a normal yield curve where short-term rates are lower than longer-term rates. So that's actually happening right now. The deep part of the inverted yield curve, we haven't seen that since the 70s or 80s. And so that recession, 80 to 82 and 73, 74 were big. That recession was big enough to cause the stock markets to go down 30 and 40% both times. And so we're watching this closely. We'll keep you informed. But the bond market's reversion or normalization is what's causing the stock market and expectations of a recession to go up. So this is Brian Decker. Hope you have a great rest of your week.